Warren Buffett and Cathie Wood are two of the most famous stock investors in the world right now, and they both have a strong history of beating the overall market. But when it comes to choosing which companies to invest in, their strategies are completely different. Cathie and her team at ARK Invest focus on disruptive innovation, and they invest in the companies who are going to change the world, while Buffett prefers to focus on the value side of the market and invest in more mature and stable companies. But in this video, we're going to discuss the stocks that both Cathie and Buffett are buying right now. And for these two investors to be buying the same company, that must mean there's a ton of future expected growth and the company's trading with a ton of value at the current share price. And before we take a look at the stocks that some of the greatest investors in the world are buying now, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z investor, and every single day we talk about the stock market, going over different stocks you can buy and any major market news. So please hit that like button and subscribe to the channel. And today we're going to focus on the companies that Warren Buffett and ARK Invest are buying right now. So to start off, late in 2020, Warren Buffett invested more than $5 billion into four of the largest pharmaceutical stocks on the market. And two of the companies he purchased were AbbVie and Bristol Myers Squibb. And then to start off 2021, when Berkshire shared their latest report, we got news that they continue to buy more big pharma names, adding to their positions in AbbVie and Merck. So we can see that Buffett must really like the pharma space right now because he's invested close to $10 billion in only a few top names. And if we take a look, Cathie Wood has been doing the same. At the start of 2021, ARK Invest did not even have a position in Bristol Myers Squibb. But we can see at this current point in time, they now own more than 3 million shares of this big pharma company. And throughout January of 2021, they were buying in extremely heavy for their ARKG ETF. And the current position of just over 3 million shares at an average cost of $60 means ARK invested more than $180 million into this big pharma name. And if we take a look, they were also buying into another company that Buffett owns as well, and that is AbbVie, ticker ABBV. And so far in February of 2021, the company has been going in extremely heavy, once again, in their ARKG ETF. And at this current point in time, they now own more than 600,000 shares of AbbVie for an average cost of more than $60 million overall. So we can see that ARK has invested close to $250 million into the same two companies that Buffett has been buying as of late. And both of these two buys were in ARK's Genomic Revolution ETF that currently trades for around $100, but has grown by 185% over the trailing 12 months. So ARK must see a ton of upside potential in the share price for these two big pharma names. So now we're going to take a closer look at Bristol Myers Squibb, at AbbVie, and also into Merck, the third big pharma name that Buffett has added to his position over the past 2 quarters. And for each of these companies, we're just going to take a look at their current financial position, the future growth expectation from the products they have in development, and their current dividend and financial situation. So if we start off with BMY, they are currently trading at $61 per share. And over the trailing 12 months, the company is down just around 7.7%. Their current market cap is at $135 billion, and they're trading at an extremely low forward PE of only 8.11. So we can see a ton of value on this name, which is why I'm sure Buffett was very attractive and added to his existing position. And if we take a look, they also have a nice dividend yield at 3.2% at this current level as well. And if we move into the company's investor presentation, we can see that over the long term, they're expecting some massive growth from their launch portfolio. And by 2029, they're projecting between 20 and 25 non-risk adjusted revenue from this new launch portfolio. And right now, they're focused on their continued innovation and have more than 20 assets with proof of concept decisions coming over the next 2 to 3 years. And right now, they also have a bunch of names in the mid to late stage of the pipeline development with new launch opportunities coming very soon. And overall, BNY has a massive development portfolio with products from all the different sectors in the healthcare field. And this is why ARK has been buying into this name, for the future potential of their pipeline of drugs in the current development. All these different names are expected to lead to massive success over the long term. And in 2020, BNY actually saw some decent growth from some of their key products. Their top selling franchises grew 12% and 16% versus the prior year. And overall, for the total fiscal year of 2020, their annual revenue was up 7% over the 2019 number. And going forward, analysts actually have some high expectations for BNY over the next 5 years. And they're predicting over 21% per year growth from this big pharma name. And the current share price of $61 sits well below the 12-month expectation of over $75 per share. And the company is rated as a strong buy with a 1.9 rating. And the current dividend yield is at 3.2%. And the company's net income payout ratio comes in at around 26% overall, which is very low and sustainable over the long term. So definitely take a look at BNY. They are one of the companies that both ARK Invest and Warren Buffett are buying into over the past few months. ARK invested more than $180 million, and Warren Buffett put over $1 billion into this leader in the big pharma space. And now if we move on to company number 2, we're going to take a look at AbbVie. They currently trade for around $107 per share, and over the trailing 12 months, the company's up 11.5%. They have a current market cap of $185 billion, with a current dividend yield of 4.95%, which is extremely high with the market that we're in right now. And again, this company offers investors a ton of value with a forward PE of only 8.48, which is extremely low. And this is another company that has a ton of products under development with future growth potential. And if we take a look, only 2 of their many products in their pipeline are expected to generate more than $15 billion in combined sales by 2025. And if we take a look, overall, similar to BNY, AbbVie has a massive R&D pipeline in the works with many different products in phase 1, phase 2, and even phase 3 of the development. And if we also take a look at some financial metrics, this has been a very strong performing company. Since 2013, their average revenue CAGR is at over 13%, and their adjusted earnings per share is growing at close to 19% per year over the company's 7-year history. And if we take a look, their total return since their inception is at 342%, which is absolutely remarkable. And overall, that is 225% growth in their dividend since 2013. And if we take a closer look at that nice high yield coming in at just below 5%, it only makes up 42% of their net income, which is extremely sustainable once again, and they're growing it at an average rate of 18% per year, which is absolutely massive. So not only are you locking in an extremely high starting yield when you buy, your annual income has a strong history of growing at a very fast rate as well. And taking a look at analyst predictions, they're really not estimating too high hopes for AbbVie in the future, with only 5% expected growth each and every year going forward. But the company is still expected as a buy, coming in as a 2, and the current share price of $107 sits well below the 12-month expectation of $120 per share. So of course, I actually do believe the company is going to outperform this 4.7% estimate. I own AbbVie in my personal portfolio, and the fact that ARK and Buffett are buying in only screams to me that I made a nice decision buying in back in 2020. So definitely take a look at this company. Buffett and Cathie Wood have been buying as of late, and they're trading with extreme value at this current level and a massive dividend yield. And now if we move on to the final stock that we're going to go over today, that is Merck. They currently trade for around $75 per share, and over the past year, the company is down more than 9%. They have a current market cap at $188 billion and trade with a forward PE of 11.5, and the company's current dividend yield is at 3.5%. And overall, we can see that this was one of the 4 companies that Buffett bought into late in 2020. We can see here that 3 of the names were AbbVie, BNY, and of course, Merck. And then later on, to start out 2021, Buffett actually added to his existing position and bought more shares of this big pharma name. And although Merck has seen a massive decline in share price over the past month, their performance in 2020 actually wasn't too bad. They delivered worldwide sales growth just over 5%, and their earnings per share was up 17% year over year. And the company was actually able to develop their pipeline, getting more drugs in future stages of development. And if we take a look, they have a bunch of key growth factors that performed extremely well in 2020. Their Keytruda grew 30% year over year. Their animal health segment was up 10%. And many other products were able to post high double-digit year-over-year growth. And taking a look going forward, they're expecting to continue to reward investors with a ton of value. And if we take a closer look at their capital plan, over the next 5 years, they're projecting to spend more than $20 billion on capital infrastructure to expand their manufacturing capacity in many of their business segments. And the company's going to do this while also returning a ton of capital to their investors in the form of a dividend and share repurchases. And the company in the trailing 12 months has also spent more than $9.2 billion on research and development. And overall, they spent $7.5 billion in dividend and share buybacks. And they grew their dividend by 7% in 2020. And something that I really like about Merck is that as of late, their dividend growth has actually accelerated. We can see they grew that payment at only 2% per year for about 5 or 6 years in a row. But as of late, from 2019, 2020, and into 2021, that annual dividend growth is expected to pick up and continue to grow at a much more reasonable rate going forward. And overall, they also do a ton of share buybacks to reward investors in that form as well. And over the trailing 12 months, they bought back $1.3 billion of the company's shares. So overall, if you're an investor in Merck, you're rewarded in many different ways in the form of share buybacks, in the form of dividend growth, and the company has a strong commitment to growing their infrastructure, which is expected to lead to the long-term sustainability of the Merck brand and their products over the next few decades in the future. And if we take a look, Yahoo Finance analysts are predicting 10% per year growth from this company, which is a nice sign. And overall, the current share price of $75 sits well below the 12-month expectation of over $96 per share, and the company is rated as a strong buy right now. And if we take a look, their current yield at 3.5% only makes up 40% of their net income, and they grow it on average over the past 5 years at 6.7% overall. So definitely do some research into Merck, as well as AbbVie and BMY, the two companies that both Cathie and Buffett are buying right now. So thank you for watching, everyone. I am the Gen Z Investor, and today we get a very interesting video. It's not very often that we get two of the greatest investors in the world buying the same companies at the same point in time. So I think both of these names in AbbVie and BMY actually have a ton of future growth up ahead. ARK Invest is great at what they do. They know what to buy, and their performance has been absolutely spectacular. And Buffett is the greatest value investor we've ever seen, and he definitely understands which companies are trading at fair valuations, and for him to buy into both AbbVie and BMY as well just means you can buy into a company right now at a great value that also is expected to grow at a massive rate with a ton of products in their pipeline with tons of future growth expectations. So thank you for watching. Please hit that like button and subscribe. I am the Gen Z Investor. We post every single day about the market, and I will see you in tomorrow's video.